As of October 2024, the Chinese stock market remains under pressure, with political interference playing a significant role in its instability. The government's attempts to stabilise markets have included aggressive fiscal stimulus and liquidity measures, but these have yet to fully restore confidence. Geopolitical tensions, both internal and external, further complicate market recovery, as policies often focus on short-term stabilisation rather than long-term economic reforms. Political decisions like limiting regulations in certain sectors, example tech, and speculated rescue packages for the property market underscore the pervasive influence of state intervention. These policies have not fully reassured investors, who are still wary of market volatility driven by regulatory unpredictability and concerns over China's relationship with the global economy. G'day folks, welcome back to another update for Pete's Investing, and today we're looking at an example of what to look out for when trading any stocks or any instruments. And today we're looking at the China A50 futures, the Xinhua stock market. So here we follow the same process as we normally do in our other videos. So first look at the monthly, the weekly and the daily trends. And as you can see on the monthly, it's actually broken above the moving average of both the CCI and the price chart, although that was not a normal activity. Now there's plenty of other news sources which explain what happens there, and that they do suggest there's probably some sort of political interference. But again, I won't get into that in terms of the whys. We're looking specifically at the technical reasons and what to look out for. So looking at it from this view, it looks pretty positive. But again, I'll explain what to look out for. So the monthly looks positive; it's bullish. The weekly, likewise, it's broken above the moving average of the CCI and the price. And on the daily, it did break above in those few days of trading, and it had a nice big rise. And the many investors, especially in China, were excited about that, and they put a lot of money and hard-earned coin into that to invest. But actually, it fell off quite strongly, and now at the moment, it's actually fallen through below the moving average band of our CCI, which is a bearish outlook. Now, importantly, that's the high-level view. Importantly, if we go to the micro view, and we're using the daily here as a reference. So first off, let me just zoom out. You can see there you could have possibly traded that on the hourly during those days from the middle of September right up until a few days ago. Now, again, we only trade based on the higher time frame. So if you're trading on the hourly, this is what you would have been looking out for. Now, in this case, we didn't have any divergence to talk about so much on the monthly, weekly and daily, but on the hourly, it's very important to look at the micro view for divergence. So let me go back a bit of history here. You can see there we had lower highs on the CCI versus higher highs on the price when the price was accelerating during that period back in early 2024, and the price eventually fell off. And then more recently, we had a couple of divergence here that was showing higher lows versus lower lows on the price. And the price kept falling. The price did appreciate very slightly, but you have to put that in context with the daily. So, for example, back here, if we look at there on the daily, you'll notice here that was back in this period, back in early August. We're still in a bearish momentum. So even that's telling you a bullish divergence is happening on the hourly, we don't go long because that's still bearish on the higher time frame. We only go long when this breaks above. Now here it broke above, but we're still going in a bit of a downtrend, so we don't trade. So you would not have taken that long trade, even though the price did appreciate ever so slightly. Back here, for example, when that was showing a bearish divergence during that period, I'll go back to, that was in May 2024. You can see there it's showing some bullish movement. Then you would have been wise to take your profits and get out of the trade. It fell off from there, and that's what that bearish divergence was telling you. So again, that was a wise move. This one you would not have traded because the daily was still bearish. And more recently, we had a bullish divergence here versus lower lows on the price. Now, if I put the cursor there, you'll notice there, if I zoom in, that was at that point, the 18th of September, back here, it broke above the moving average band of the CCI, even though the price is still below. You could have theoretically started buying during this period. I would have waited till the price broke above on that candle there to go long. And again, we only trade on a lower time frame based on the higher time frame trend. Now what happened here is we started getting lower highs on the CCI, but the price kept accelerating. Now you could have, if you're watching this on the hourly, it would have been a bit of a stressful exercise, but again, this applies to any stock or any instrument you're trading, not just for the Chinese market, but for any instrument or any share price. So as the price accelerates, you would have entered when the CCI and the price is above the moving average, and you would have closed it when it closed under the moving average band in that point there. Re-entered again there and closed it there. Re-entered, and that would have held on until about that point there and closed it. Bearing in mind, the CCI is dropping off. So let's assuming you're watching that on the hourly, you would have made nice little trades during that period. Another trade there until it got up to this point and it fell down into the moving average band. Now notice there we've got a bearish divergence, and that fell off quite strongly. So if we draw a Fibonacci retracement from that high to that low, you can see that it's broken below that 50% level, and it looks like it may fall further towards the 61%. And if it falls below that 61%, we're going to see further declines. You'll notice here as well, that's not a bullish divergence. You notice the CCI is moving in line with the price. The CCI is making higher lows, but so is the price at the moment. But at the moment, it looks like the price is still falling, and so is the CCI, and that may fall further. So again, just a quick recap. This applies to any instrument, not just the Chinese market. Always pay attention to the smaller time frame. Even if you're trading on the daily, you always pay attention to the smaller time frame to see if there's any divergence, because the intraday charts generally have more divergent signals than the higher level charts. Even though you can still get divergence on the monthly, weekly, and daily, you get more of them on the, in this case, the 1 hour. You can apply this to the 2 hours, the 4 hours, the 15-minute, or whatever time frame you're trading on the intraday. Okay, hopefully that's been of value. To support us more, make sure you hit that like and subscribe button and share the videos. But for some more insights into some blue chip share scans, I do a weekly report, and in that report we also look at insider information for shares that are trending in a bullish manner. So go to the Patreon page, and links in the description below.